Welcome back to the Global Business Report on Rise News. The first quarter of the year is almost over, and some Nigerian equities, stock prices have done pretty well. Let's take a look at, I guess, the top 5 here on the Nigerian Stock Exchange as at the 25th of March. That's last Friday. So Academy Press there, up, it's a printing press company, up by 254%. Score, vehicle company, up by 128%. Learn Africa, 85% growth there in the first quarter. Guinness in the brewery sector, up by 79.5%. PZ Customs up by 52.5%. So joining us to review the performance of and we've got some more of them, of course. Presco PLC up there in the agri space, 51% return there so far this quarter. Seplat also in oil and gas upstream, 43.1%. Royal Exchange in insurance, 37.5%. EcoBank in banking, 31% climb. Fitsin in the healthcare space, pharmaceuticals up by 31%. Mustapha Wahab, oil and gas analyst with Hill Denham, joins us to discuss further. Mustafa, you're very welcome. Good to see you. Happy New Year.
Yeah. Happy New Year.
Excellent stuff. Yeah. So I think the NGX up by 9.5% so far this quarter. How would you assess the exchange, the performance of the exchange so far?
All right, so I saw some of the names that you just listed on your screen, right? Yeah. But the real driver of the market is I think Seplat and Guinness, MTN and Airtel, right? Okay. So at the start of this year, what we mentioned in Chapo in-house is that, look, if you play the market from the broader perspective, from the index generally, you'll probably be losing out. So this year, our view is that, look, market is going to be purely driven by corporate-induced actions, right? MTN, they did primary offer recently. That drove a lot of, investors' interest. Yeah. Airtel, because of this opportunity of, selling in Nigeria and then, buying in Nigeria and selling in London to exit the country. You can say the same thing for Seplat as well. A lot of these companies, major, heavyweight names, they've been, roughly induced by these corporate actions. That's the reason why we're seeing this, strong numbers as of Q1 2021, 2022 rather.
Domestic, can you talk about, I guess, it looks like domestic investors have been carrying the markets so far. What do you make of the fall in foreign investors on the exchange?
Yeah, I think you are right. Just to put some perspective to what you just said, the last time we checked the data, domestic investors now carry up to 80% of the total.
80%?
80% of the total, investment position as far as equities is concerned. Yeah. Foreign guys is down to 20%, but from about 40% from last year, right? And this is purely because of FX, right? I'm sure you must have heard from a lot of analysts that you've been speaking to over the last years that, look, Nigerian market is cheap. Look at it from whatever perspective, whether PE basis or dividend yield basis, Nigerian market is significantly attractive. But foreign guys just do not see that interest in Nigerian market because obviously, this gross FX illiquidity in the market. In fact, the guys that are in the market right now, they are trying to leave the market, but they are not able to do so, because of this, lack of dollar in the market, right? So, again, I think that if this sort of investment environments continue, it is unlikely that we'll see foreign investors, coming back into the market. I'm sure you must have seen, FPI data that was released for Q4. I think that FPI was down by up to what? I think 50%, double digits, right?
So that's a testament to what you're talking about here.
Exactly, it's a testament. If you check the equity portion of that, it was also down by up to 33%, for Q4. So again, this lack of FX, availability in the market is what is sort of pushing foreign guys away from the emerging market like Nigeria. That is the reason why we're not seeing them coming into the market.
What other headwinds do you, I guess, see for 2022 as far as the market is concerned?
So valuation perspective, I think again, like I said at the start, Nigerian market is cheap, right? But FX is sort of blocking investors interest to it is limiting their interest in Nigeria's market. But we think this year is pre-election year. We've started to see APC convention holding last week. There's a lot of politicking going there. Yep. So if you're a foreign guy, you are bringing your portfolio to Africa and you see what is going on in Nigerian economics, political space right now, you sort of be afraid that, look, if this is happening in APC convention right now, what are we going to see, in the real election in 2023? So there's a lot of, uncertainty regarding, political landscape in Nigeria. So I think a normal thinking investors will want to sort of wait until we get out of that election cycle, be clear that look, we've seen the president has nominated a minister, and we now have clear cuts economic or political policies in 2023, and that would sort of probably induce some guys to start coming back into the market.
Great stuff. As far as the top performing stocks that we've seen so far, so you're saying that, just to go back that again, for the first quarter, that's corporate actions that you're seeing that's going to continue to drive that?
It's purely corporate actions. So and I think that if anybody wants to really make strong alpha in this market, they'll probably have to start to look at those companies who will probably be releasing some any induced corporate actions. I mean, Seplat's share has been suspended from trading on the NGX, and that's basically because of the fact that the company has now announced that they want to list the new holding structure, holding company, which is going to be which 4 different companies is going to be embedded under the the new group. That was sort of, I mean, when we spoke to management last week for Access Bank, what they told us clearly is that this move of this old structure is just basically to diversify, earnings. So if you hear things like that and you know that these are some of the things that will drive earnings strongly, for that sort of bank, you probably want to sort of position in that sort of names, right? Beyond that, all those companies whose corporate actions induce earnings driver is going to be announced, going forward, you should probably position in those sort of names. And the last example would be a company like Seplat, right? I mean, we've seen investors, reacting to that MPNU acquisition, but again, NNPC has come to announce that look, they are blocking it. Seplat has also come out to say that they've not received any official letter from NNPC. So I think what the market is waiting for, as far as Seplat is concerned, is that green light that look, NNPC is going to allow the deal to go through. Once that comes to the market will go rogue on the stock.
Interesting. Thanks for that, Mustapha. Let's talk about quickly fixed income and money markets. I think, how would you describe for the first quarter, like bonds, for instance? How would you characterize what we've seen so far?
Yeah, so for bond, I mean, bond investors are sort of understand, look, the MPC or the CBN generally, they are starting to become a little bit more hawkish. In the last policy meeting, they held rates, but the body language of the CBN is clearly from the hawkish side of things, right? So possibilities are that between now and the next 2-3 MPCs, they'll probably start to raise rates significantly. So a lot of investors now, they are moving a little bit away from bond markets and buying more of T-bills, staying short, such that when those instruments mature, they are able to roll over at an higher yield from the bond instrument. So what I'm saying generally is that investors are not really doing a lot in the bond market, because if you go into bond right now and they start raising rates, later in the future, you probably be burning yourself in the finger.
What about in fact, the last T-bill? Let's look at Treasury bills. The last auction, the 364-day was doing like 4%. How would you describe things in the for the money market space?
I mean, if you look at where inflation is right now, you clearly see that it's not really attractive. But as we always say in the investment world, holding cash is more or less like a sin. If you don't, so if you don't have where to put it, I mean, you have T-bills, just put the money there. There's a lot of liquidity right now in the system. This week, close to 330 billion is going to be coming from FAC. NTB of about 140 billion is going to be eating the system. These monies, they have to be reinvested. That's the reason why we're seeing investors still putting money, despite the fact that the yield is ridiculously.
So it's a big. So basically, what you're saying is that the options are limited.
Limited. In this sort of environment, the ideal thing for you to do is to go rogue on equities, really. That's what you're supposed to do. Yeah,
but then equities come with a higher risk. Yeah, so
absolutely.
You're risking your funds if you're going in there.
You don't want to do that.
So I guess if you're talking about portfolio balancing here, it would be maybe a mix of equities, bonds, but something has to stay in cash now. Cash is in itself. I know you say it's. I love that. You say it's a sin to have cash with inflation, where inflation is. But if you're looking at it, if you're doing portfolio allocation, something has to stay in cash now, right? Or majority would be in equities and then fixed income.
That's what it's supposed to be, right? The largest asset management industry in Nigeria is pension funds,
right?
And most of them are not allowed to invest in dollar-denominated assets. So if you have personal portfolio, I think the best bet right now is to just go long on dollar fund, Euro bond, or even dollar itself, right? Some of us have kept some $1,000 or $1.5 into our accounts for the last year. That's probably the best investment that we've seen.
Versus inflation.
Without managing anything.
Right.
I mean, that's probably what you are supposed to do if you have to go to cash. But some guys who cannot invest in dollar-denominated assets, they have no choice. They would have to stay, within the domestic market.
Mustapha Wahab, oil and gas analyst, thank you so much for taking us through the first quarter for a number of securities. Very, very interesting having a chat with you. It's Nigeria, fascinating investment landscape. Mustapha, thank you so much.
Thank you.